CNBC TV 18's Women and Money series, Financial Quotient, powered by For Her, an investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund.
Hello and welcome to CNBC TV 18's Women and Money series presents Financial Quotient, powered by For Her, an investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. I'm Sumera Apti. Today, we'll be taking a deep dive into the world of portfolio diversification and help you understand why you should consider overseas investing. To find out all the various aspects of this, the advantages, disadvantages, we're joined by Alpa Shah, founder of Empower Small Steps Education. Alpa, thanks very much for talking about this topic, which is becoming more and more important every day. So before we begin talking about the nuances of international investing, can we set the stage by actually talking to our viewers about what we mean when we say international investing? What exactly is it?
Of course, there are so many advantages if we start investing in international stocks. Like, it gives you diversification. It is outperformed if you consider it with Indian stock market returns. High-tech companies, global innovation, we can consider if we invest in international stocks. Of course, the depreciating rupee feature, I will explain that also in detail later on, but it's a very important feature which every investor should consider while investing. And protection, and of course, nowadays kids are studying abroad and families are settling abroad. So it's a very, very important feature and aspect as far as investments are concerned. And you must consider investing in international stocks. And if you compare Indian stock market with international stock market, there's a huge difference and advantages. So in India, we have two stock exchanges, right? National Stock Exchange and Bombay Stock Exchange. Well, in US, they have two stock exchanges, NYSE and NASDAQ. But the beauty is that in India, all the companies are listed in both the stock exchanges. Whereas in US, all the technology company, the innovation companies are listed in NASDAQ. And the traditional companies, which are manufacturing industrial companies, blue chips, are listed in NYSE. And if you see the size, NYSE stock exchange, it is close to $25 trillion market capitalization. And NASDAQ is $20 trillion market capitalization compared to Indian, which is like $3 trillion market capitalization. So I'm nowhere saying that Indian stock market is not a better option. Definitely, it is one of the most beautiful option which we all investors have. But the world has changed, especially in post-COVID era. I think it is high time that everyone should at least invest 15 to 20% type of the overall portfolio investments into international stocks.
Alpa, which is the best way to get this diversification? Is it, through mutual funds? And should mutual funds also necessarily be just US focused, or can investors consider other geographies as well?
Yeah, so you can invest either directly, you can open your international broking account and start investing, and imagine the kind of stocks you can buy. In NYSE, you can buy Berkshire Hathaway, Alibaba, Walmart, Wells Fargo, Procter and Gamble, Bank of America, and so on and so forth. Whereas in Nasdaq, you can buy Intel, Tesla, Zoom, Apple, Amazon, Netflix, Facebook, Google. Oh my God. It is so, I think, futuristic companies which everyone should have in their portfolio. But at the same time, if you invest through index, I think that's the best way right now to invest if you are a beginner. If you are starting for the first time in investing in international stocks, then index fund is the best. Of course, there are various other methods, like you can invest through fund of funds, index ETF also you can invest. You can invest in feeder fund, which again invest into ETFs, mutual funds, or stocks. You can invest in actively managed international fund. You can invest through multi-asset allocation funds, wherein some portion is invested into international stocks. You can invest in thematic sectorial international fund, or you can also go country specific or region specific also. So there are various ways wherein you can invest your money in international stocks or funds. But I would highly recommend ETFs, because ETF is nothing but a combination of both the things. Like, you are investing in stocks because ETF is traded, it is in demat form, and at the same time, it is a mutual fund index fund. So I think the combination of ETF is beautifully designed, and I think it's one of the very easy way for anyone to start investing in international funds. And of course, you get commodity ETFs, you get bank ETF, you get so many, but the most uh, important one right now, which is really performing very well, is international stocks ETF, and of course, these also you can consider.
Alpa, is international investing for all kinds of investors, or are there certain investors who require this level of diversification? And also, for women investors, how important is it?
Uh, I think it is not for everyone. Let me tell you, be very honestly, because we are still struggling. People have not started their SIP in domestic funds also. So, as far as India is concerned, definitely we have lot of opportunity if we invest in our own domestic equity funds, that too through mutual fund and SIP route. But of course, the international funds cater to a very niche segment who really understand the geographic global advantages, or somebody who are planning to settle abroad, whose kids are studying abroad, or those who really again want to diversify their equity portfolio. So if you already have a lot of Indian stocks like large cap, mid cap, small cap, or any direct stocks also, if you are invested heavily, then absolutely it makes sense for you to invest in international stocks.
Alpa, what are the disadvantages, if any, to international investing?
Honestly, hardly two disadvantages I can think of right now. One is if there is any political problems or geographical political problems, I would say. But that will happen even in India, if something goes wrong with the elections, or I mean, that kind of risk is even there when we invest in Indian markets, right? And yeah, so I think according to me, this is one of the major risk, and the currency volatility is also a very big risk. But as far as rupee depreciation is concerned, I think it doesn't make much difference to us if we invest in international stocks. You won't believe the it was 1 rupee against $1 in 1947, when we got the freedom. And when I was born in 1971, the dollar price was only 17 rupees. And today it's around 73, 74. So imagine what kind of advantage we have if we invest in international stocks.
Alpa, the other thing I want to ask is that, we've seen now certain categories of equity mutual funds, like say flexi caps, more popularly, have exposure to international stocks. Is that the better way to invest, or should you go for specific fund of funds or ETFs which are purely overseas focused, or do you go for diversified equity funds which may have some proportion of international equity?
So personally, if you ask me, Sumira, I would surely recommend to go through pure ETFs or fund of funds or international stocks or S&P index or whatever you feel like, but do it purely 100% that way, rather than mixing and putting it through multi-asset allocation fund, wherein some portion is in international stocks and some portion is in Indian stocks. That is what I personally feel. But again, it purely depends on the fund manager's skill set, the theme of the scheme, and of course your belief in how much portion you would like to invest in international fund.
Alpa, are some AMCs better at managing international exposure than others? I mean, for example, some Indian mutual fund houses have tie-ups with international AMCs. Would they be in a better position to manage this international exposure? And therefore, should that be a factor in selection of your fund?
Not really, if you personally ask me. Finally, what matter is, I think it's the process-driven organization, the compliance-driven mutual fund house, the legacy which they carry, and the fund manager's skill set. So I don't think that any kind of tie-up with international partner will really make difference with the returns or the kind of international stock selection or the scheme which they have been investing it into will matter a lot. No, not really.
And the taxation would be the same as equity funds?
Yeah, so when you invest in gold ETF and all, it is considered in comparison with the debt taxation. But when you invest in equity, the same taxation is applicable. So the short term capital gain tax is 15% and long term capital gain tax is 10%. That is what is the taxation all about.
And Alpa, just wanted to also understand that, like you said, the ideal exposure should be between 20 to 25%. Where does one start? I mean, you start with, say, the mother market, US. How does your portfolio, the international portion of your portfolio, evolve from there? I mean, what are the next steps? Do you go to a trending theme, or do you go to another geography? Which is the right way to do it?
Very simple answer to this is that my own story I would like to mention here, that my son, he went to US last year for studies, and first thing what he did is he invested in S&P 500 without even thinking or asking me. So it's like, first thing what you should do is the simplest way of investing, and which gives you less risk, less volatility, and no brainer kind of instrument, is like you can either invest in S&P index or even Russell 2000, which is like nowadays quite popular, which invests into small caps and small cap stocks of US. And of course, as I've already mentioned you, that one must surely start with SIP route in a disciplined way. Long term is applicable anywhere in the world when you are investing in equity. So there is no short-term gains as far as even international stocks are concerned. You should be optimum. You cannot have any greed as far as investing in international markets are concerned. And of course, the most beautiful thing when you invest in US stock market is that they also allow fractional shares. So if I want to buy MRF in India, I mean, I have to buy 80,000 rupees for one share, and minimum is one share. But when I go to US stock market and if I invest there, even fractional investments are allowed. So even a retail most investor, like a student, as I mentioned you, can also start investing. And no other better investor than women, because they are futuristic, they think about family, they take minimal risk, but they are very forward thinking. And I think these are the qualities which every international investor should have.
All right, Alpa, thank you very much for joining in and for talking about, how to go about including international stocks and, exposure in your portfolio. And, really the fact remains that different markets follow, they don't have a direct correlation with their own market, and therefore some part of your portfolio will always be performing. And for that reason, all investors may actually see whether or not this is something which is suitable for their portfolio. So thanks very much for watching. I hope you found this useful. Stay safe.
CNBC TV 18's Women and Money series, Financial Quotient, powered by For Her, an investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.